Hello to all traders and welcome back to another Market Insights video brought to you by Orbex. So we're looking at the dollar today because it has kept dropping by almost 2% in this last week alone. And this is on the back of dropping over 11% from its 20-year high that we saw in September, where the DXY index actually topped over $114. Now, just looking at the charts, it's just hovering precariously below 103, actually dropped lower in yesterday's session. So what is all this concern about? Is the sell-off going to keep progressing throughout the course of the year? Well, a lot of economists do believe it will do so because the Fed is not expected to aggressively raise rates anymore. It's coming in at a 25 basis point rate hike for the next meeting on the 1st of February, which isn't so far away. It was projected 50 basis points, but now the Fed is looking to relax even further. And, this won't even take us above 5% on this rate hike, even though inflation is actually coming down more and more. 6.5%, don't forget, from the core inflation rate that was listed last week. So as you can see, traders are not responding too well to this news, especially on the Dow. They're looking at other assets now to really start moving higher in the market, such as gold and obviously the competitive basket of the FX pairs against the dollar. So what will become of 2023 for the dollar? As I said, it is expected to keep on falling lower with the Fed not really helping in this progression. But, the dollar has had its day in the last few months. Like I said, a 20-year high going back to 2002 that we didn't see these prices going above the 114 handle, almost topping the 115 handle. At the moment now, as you can see, a major sell-off for the last 6 months. And, in yesterday's trading, like I said, we fell below the 102 handle for the first time in quite a while. This looks like probably a best case scenario for the DXY if we can just get above the 103 level for today's or by the end of the week's trading events. However, there's not really too much in the fundamentals that could bring it up roughly to about this level here. As I said, it's in a descending channel at the moment if we're looking at a technical standpoint, and we're just seeing what the next move is for this major greenback in the markets as well. If we go into the 4-hour chart, I just want to show the daily chart just to get a bigger scope of how things are progressing. On the 4-hour chart, though, it's looking a little bit more precarious because we are trading below the Ichimoku cloud quite significantly. Not too many divergences on the RSI. You can just see a slight bullish one, but it's not really something to take note of too much in that respect. And now we're just seeing what the consequences are for the DXY to be so weak, and obviously the Fed has really been driving the direction of the dollar for the last year. These aggressive rate hikes that have been happening for the majority of 2022 seem to be a thing of the past now, and as I said, they're looking for a terminal rate in this rate hike problem that they've been having for the last nearly 2 years now. So we'll see what happens in the next few trading sessions. On the Dow, on the other hand, I've got a lot of traders asking me where the direction of the Dow is going to go. Well, for me, now that we've gone through on the daily chart this V-shaped recovery here, pretty much we hit some resistance when we topped that particular last swing high. I'll just note it out here so it's a little bit easy to see. As you can see here, roughly about the just over the 34,000 mark, we're getting that same resistance now, as you can see, and prices are starting to fall a little bit lower. So we're expecting another correction, another move to the downside, possibly at least 400 to 500 points, and then we'll see if we can bounce off this top border of the Ichimoku cloud and then start really progressing and have a confirmation. This area here wasn't really confirmed because we had a big spike one day, as you can see, and then we had a bearish candle which brought the prices lower. And as you can see here, this is a major false spike in the market as well. So this wasn't really confirmed. It was just pretty much traders get a little bit excited, moving to the upside. And then as you can see, it all kind of collapsed and started to move lower. So we are now looking to see what the next move is for the Dow. If we look on the 4-hour chart, we are seeing at the moment quite considerable consolidation up until the point where we saw a slight bullish channel emerging. But as I said, we are now looking to see, we've topped 34,000, confirmed that break, but we're now seeing what the next step is, just roughly above the halfway mark of the 34,000 area. Not too much again in the way of divergences. You could say there's a slight bearish one forming, but it's not really too clear for a trading signal. So we're just seeing now where the next resistance zone is, if we can pierce that and start moving to the upside. But as I said, the Fed is heavily pushing indices, stocks, and the dollar in the directions that they're going. So keep an eye out for the next Fed meeting on February the 1st, not so long away, and we'll see where the next move is. So thank you very much for joining me. This video will be put on our YouTube channel as usual, to comment and like and let me know what your thoughts are. So until tomorrow, bye for now and have a great trading day ahead.